The rupee is quietly falling and most people haven't even noticed it yet. Is this normal or is something actually going wrong? Listen till the end because this is not just a currency move, it is a signal that could affect your expenses, your investment, and the entire market. What you are seeing right now is not noise, it is pressure. And the reason most people don't react to currency movement is because it feels distant. It doesn't feel like something that affects your daily life. But the truth is, currency is one of the most powerful forces silently shaping your money. And when it starts moving in a certain direction consistently, it is never random. Currencies don't fall for one reason. They fall because of a combination of pressures building at the same time. Right now, three major forces are acting on the rupee. First, the global strength of dollar. When the US economy stays strong or the interest rates remain high, global money flows towards the dollar, pulling currencies like the rupee down. Second, oil dependency. India imports a large portion of its oil. So when the oil prices rise, more dollars are needed, putting pressure on the rupee. Third, capital flows. If foreign investors start pulling money out of Indian markets, it weakens the currency further. So what you are seeing is not a sudden drop. It is a gradual buildup of pressure. Until recently, the central bank was actively managing this. When the rupee weakened too fast, RBI would step in, selling dollars from its reserves to stabilize the currency. Now, this kept things under control. But now, there are signs that intervention is reducing. And this is a very important shift because when a central bank steps back slightly, it allows the market to express the real pressure, which means the movement you see now is closer to the actual underlying stress. So, why is this not a crisis yet? Right now, nothing is broken. India still has strong reserves, stable growth, controlled inflation for now. So, this is not a panic situation, but calling it nothing would also be wrong because currency moves slowly until they don't. Now, this is where most people wake up too late. If the rupee weakens further, imports become expensive, fuel prices rise, inflation creeps up, and suddenly your monthly expenses increase. Your savings lose value in real terms. Your investment returns feel weaker. At the same time, RBI may keep the interest rates higher, loans stay expensive, markets become unstable. So, even though you don't track the rupee daily, it quietly controls your financial reality. Currency is not just about exchange rates, it is about confidence. When a currency weakens consistently, it just reflects external pressure, internal adjustment, global positioning. And when central banks reduce the intervention, it often means they are choosing to preserve the reserves instead of artificially controlling the market. Now, that is a strategic move, but it also means the market becomes more honest and sometimes more volatile. Most people only notice the currency when things go wrong. By then, the adjustment has already happened. Right now, this is still a signal phase. But signals matter because in finance, those who understand early don't react, they prepare. And preparation is what separates the stability from stress.